Kotak Bank has reported an inline set of numbers. Net interest income and operating profit has risen on a year-on-year basis. Let's understand a little bit more about what has really led to this healthy set of numbers and what has led to the margin decline, which has been in line with street expectations. My colleague Harsh joins in to sum it up for us. Harsh?
Well, yes, absolutely. So we're looking at a slight bit of margin decline, as you correctly mentioned. You're seeing a net interest income roughly around the 6,297 crore mark, which is flat on a sequential basis, 23% uptick year over year. You're seeing operating profit rise to 4,610 crore, which is a 29% year over year growth, 7% shrink sequentially on the operating profit. Provisions coming in largely flat sequentially, 367 crore, and you're seeing profit after tax at 3,191 crore, which is a 24% uptick on a year-on-year basis. Overall, you're seeing NPA ratios largely steady, 5 bips decline on the GNPA, 3 bips decline on the NNPA. You're seeing a slight uptick when it comes to the GNPA absolute number and advances as well as deposits on the growth front. The advances have grown a solid 6% sequentially, 18% year over year. Deposits also showing good traction, 4% up sequentially. The CASA ratio has seen a bit of a decline. You're seeing the CASA ratio fall from that 49% mark to 48.3%. And you're seeing the NIMS number come in at 5.22%, which was above the 5.5% mark. So clear contraction with regard to margins. But let me quickly have both our guests to dissect this result further. We have Aditya Shah and Mahantesh Sabarat. Aditya, let me come to you first. Assess the results for us. There's been a margin decline. Your ROAs have also seen a bit of a decline. How do you view the numbers overall?
So it is the beginning of a new era for Kotak Mahindra Bank. We feel that Uday Kotak is left, and we now need to see what really happens on that side. Result-wise, everything is very stable. The last quarter, the bank had already guided that the NIMs were unsustainable, and it was a temporary expansion in the NIMs, and the NIMs will come back very close to 5%. I'm not worried on the NIMs. The credit growth is strong as expected, as Uday Kotak had guided, as well as the deposit growth is fair enough. And the CASA ratio is declined for almost all banks. Cost of deposits is rising for all banks, so nothing to worry about there for sure. Book for Kotak Mahindra Bank is relatively cleaner as compared to all other banks, so therefore nothing to worry there about as well. So the next trigger for Kotak Bank will now be when RBI approves the two candidates that they have given. If one of them is approved, the hangover for the stock will then get removed and the stock will then move on. Overall, nothing to complain about on the results. Very stable set of numbers.
Thanks for that, Aditya. Mahantesh, let me switch it over to you. Kotak Mahindra Bank was one of the gainers in trade yesterday. Out of all that was doom and gloom in yesterday's trade, do you think that the bottom for Kotak is made? Because it's a largely steady set of numbers. Of course, some amount of leadership clarity required going forward. Anything that stood out for you on numbers? That's my first question. And second is, how do you view the stock and the stock price in terms of valuations?
Firstly, the results seem to be all right. There is a quarter-on-quarter decline, but that decline in profitability seems to have come from the subsidiary dividend amount of 300 odd crore, but one can sort of ignore it on a quarter-on-quarter basis. Asset quality is better. But, what has really struck me has been that the capitalization ratio has actually shrunk a bit, quite a bit, and I'm slightly worried about that. Although the CET1 ratio right now is 20.6, it's not something which is alarmingly bad, but it has nevertheless declined from a year-on-year basis, and tells me that the bank needs to, if this kind of profitability trend, which means a sequential decline kind of trend, continues because of new compressions, they may soon have to worry about raising capital ahead.